So with that being said, this is how we'll go through it. I'm going to go ahead and if you're on the call now, we're just going to go ahead. I'm going to give a master class on just kind of how I view the markets from beginning to end, how I prepare myself for the week, how I structure my thinking in what we're doing. Obviously, different people, they trade differently. Different people have different strategies. And as long as you are profitable, your strategy works, right? So as I go through what works for me, it doesn't necessarily have to be exactly what works for you. It can be, you may take bits and pieces from this and bits and pieces from other educators that you work alongside. Um, but first and foremost, I always, as I begin my week, I like to take a view of just the week to come. You know what I'm saying? I utilize tools, resources like Forex Factory, which is going to, obviously give us out the news. It's also going to show you which currency pairs are already moving. You know what I'm saying? What's already moving. Right now, we can see that the Euro USD, GBP USD, AUD USD, NZD USD are already positive. But at the exact same time, you have other currencies like USD CHF and USD CAD that are also positive. That's not typical, right? Typically, we have these things move in opposite directions of one another. When the Euro USD pairs, the pairs that start with that end with the USD are positive, we'll typically see the pairs that begin with the USD be negative. It's typically how that would work. Right now, we're seeing that all of these things are kind of moving in the same direction aside from USD JPY. So that gives us a couple of hints on where we can set our focus, right? As we prepare for the week ahead, some of the things that we may see, news, we have pending home sales on Monday, December 29th. Following that, we have our FOMC meeting minutes on Tuesday, December 30th. We have red folders and orange folders. I typically will go to my filter and I will filter out all of the yellow folders and all of the gray folders and focus specifically on just the red and the orange folders. Those are going to be your high and your medium impact news. Those are going to be the ones that move the market, you know what I'm saying, more dramatically than the yellow folders. I mean, yeah, than the yellow folders. Then we have our unemployment claims on Wednesday. This is going to be our last unemployment claims for the year. And this one is going to be released weekly. So this is our weekly unemployment numbers, the last news event that we have for the US dollar. So we can see how that'll, move the market. Thursday, January 1st, no news. Friday, January 2nd, no news. So we're coming into a slower week. This is a week to where a lot of people, especially the retail traders, they're going to be taking the time off. You know what I'm saying? They're not going to be actively watching the market or actively involved. This is also the time to where the larger institutions, the banks, the hedge funds, these people they're balancing their books. You know what I'm saying? They're getting their final numbers together. They're closing out, preparing for the new year. What I want to do is I want to set my mindset or set the structures and start to think about what potential opportunities may we see in the year to come, right? So with that being said, after I, look at or utilize the news, we really didn't have much on the calendar whatsoever. We had some USD news, just a bit. So we'll go through some of the USD pairs and I'll show you kind of how I view the market. So there are a couple of, when you first get started trading in the market, one thing that you'll learn is that there are major currency pairs and then there are minor currency pairs, right? The major currency pairs are going to be the things like the US dollar, the Japanese yen, the Great British pound, right? These are going to be the pairs that the market typically will trade. They're the bigger pairs. There will be a lot of pairs that move or trade in alignment or opposite of these pairs. Like you can see here, the way that I try to organize these things for myself is I like to create lists, right? I create a list for the dollar index, the DXY, which the DXY is a basket of currencies. You know what I'm saying? The dollar index is a basket of currencies. Essentially, what that means is it is the Great British Pound, the New Zealand dollar, the euro, the Australian dollar. All of these currency pairs traded against the dollar. So what you'll see is in the times where the dollar is showing weakness, when the dollar is weak or the DXY is weak, you'll notice that these other pairs, the um, Australian dollars, the New Zealand dollars, the Great British Pound, they will all be moving opposite of the dollar, right? So I always use the dollar, to gauge my trades that I'm taking when it comes to anything that is involving the USD. You know what I'm saying? Outside of that, I also create a list for myself that includes the Japanese yen. Those are kind of my primary two currencies that I focus on. I like the yen pairs. I like the dollar pairs. I like the Great British Pound pairs just as well. I trade some GBP, JPYs, things like that. GBP CHF is a great moving pair. GBP USD is one of the bangers that we really were able to take advantage of all throughout this year. This past year, we had a lot of great opportunities on the Great British Pound. And I love, I really focus in on some of those pairs. So one of the first things that I look at is if you look at this list here, it's a little bit different with the US dollar right now. You can see that in the US dollar, we have the New Zealand dollar that is negative, while the DXY is also negative. The euro, the Great British Pound, the Australian dollar are all positive. So these are properly moving against the dollar index as we would expect. But if you look at the Japanese yen, what you'll see is that every single yen pair is actually moving in the same direction. They're all negative in relation to the Japanese yen basket. So what does that tell you, right? The first thing that that's going to tell you is that there is strength in the Japanese yen. We've seen a little bit of strength here in the yen already, right? And all of these other pairs have, started to respond to the negative or the positive, the strength of the yen. They've all turned negative against the yen. So what we'll do is since this one is a bit more clear than the US dollar, and of course, even the US dollar, we would expect it to be the most clear during the US dollar session. What we're going to do is for today, we're going to take a look at the yen pairs and the yen basket. And we're going to see what's going on over there. What can we expect from the yen? So first and foremost, now we can look at this on a weekly time frame, daily time frame. We'll just go back. I like to do like a top-down analysis. You can see that over the past several weeks, the yen has been very bullish. One, two, three, we say 1, 2, 3, 4, 5, 6, 7 weeks in a row that the yen has been bullish, right? So that's one thing that we can consider. There's all sellers, there's been no buy side in this market. So in one sense, we can expect that maybe the market just continues to sell from there, right? Maybe there are no interested buyers in the market. But if we're thinking about a market where there are buyers and sellers, even if there are a large amount of sellers, we would still expect that there would be somebody buying from the sellers. You know what I'm saying? If you were to go to any market, to the store, whatever the case may be, let's say that you had a physical item that you wanted to sell. If you wanted to sell it, you would need somebody to sell it to. You would need somebody to buy it from you. So typically what we expect is we expect that the market is going to be, balanced to some degree to where there will be a mixture of buyers and sellers, right? And for all the sellers in the market, we would expect for there to be buyers in the market, to buy from those sellers. So with that being said, When I look at the Japanese yen basket on the weekly time frame, I notice a couple of things, right? First and foremost, the level that we're trading at now, we've traded here before, right? This is an area that we have been to and traded away from in the past. With that being said, when we traded at this level in the past, we can see exactly what the outcome was, right? We might have gone and said that, oh, you know what? This market is selling, right? The market's selling, and we can actually see here that the last time we were selling here, it was kind of like a similar rhythm to it. We actually had multiple sellers here, sell side, sell side, sell side, sell side, four seller candles. We actually had a little bit of a hesitation here where the market sold, bought, and then continued to sell. But overall, we would say that this market was previously extremely bearish when we approached this level in the past, right? At this point in time, once we arrived at this level, the next thing that happened was there was actually a pretty aggressive response. Look at this small candle. This is what it looked like in the beginning. Before there was any buy side interest, this is what it looked like. When we play that forward just a bit, right? I'll actually go up to just three. I probably don't even need to go 3x speed because coming up just shortly after this point in time, what we saw was that market immediately reversed on the weekly time frame, right? We found structure here, and then we started to create like what is a bullish engulfing candle. This candle shows us that there are now buyers in the market. But when we first approached this level, it didn't seem that way. It seemed like there were no buyers interested. It was only sell side, right? We know what happened from there since we're in replay, and we can see as the market. And let's see, this was the beginning of July, which if you think about the beginning of July, that's also the beginning of the third quarter, right? Q3. So that was at the start of the quarter. We're now at the start of the first quarter. So we're just seeing some similarities just like that. You know what I'm saying? The next thing that we see is over the next coming weeks, the buyers were clear. And if we had entered into the market off of this structure, right, this is actually going to be a demand zone. But if we had entered into the market off of this level here, we would have seen an incredible move to the buy side, right? Huge. Or if we were trading one of the pairs against the yen, we would have seen a huge sell side interest, right? A lot of people, they didn't actually, they weren't able to take advantage of this until maybe they saw price truly took out the previous highs. By the time that we get here, it's undeniable what's happening in the market. It's completely undeniable. There's nobody that can question it. This market is starting to turn bullish, right? In some degree. We've broken this trend line, right? We've broken this trend line, and now we've created higher highs. The next thing that happens is the market just continues to surge. If you were in this trade at any point in time, even if you waited and you didn't enter into the market until this level here, you would have still seen a profit on your trade, right? The market then finds some resistance here. You can see this is, and I'll slow it down. You can see that this is a previous level of structure. This was previous support that once broken became resistance, and the market actually rejected from that level there. We'll go ahead and we will speed this up just a little bit because I want to see if we see any similarities, but we'll move from 1x speed into 3, right? Just so it goes a little bit faster. We start to see the rejections here in this area here. And the market shows some, we come back to this area. This is a very strong area of resistance. You know what I'm saying? When the market comes here, it rejects. It falls away from that current that current structure, that previous level of resistance, right? So this area here is one that we will have to focus on. It's very important that we keep our attention on this structure here because once the market, if it ever is able to break above here, we'll expect for this to become the new floors and we'll expect to see the market trade much higher from there. Another thing that I noticed as I zoom out just a little bit further is that I actually see these equal highs here with an imbalance up here, right? So this is another area where there are sellers in the market, but there are very few, if any, there's no buyers really. You know what I'm saying? So we'll keep our attention on this area here because if the market ever does come back here, we're going to expect it to test higher, right? As we continue things forward, we can see that the market goes and we find some further support. And we trade in this area here, right, for quite a while. We're unable to break through this level of resistance. We come back and we're testing it. What we're noticing here, what I'm noticing here, is that the market is actually creating equal highs. You know what I'm saying? It's not that the market is showing us lower highs and lower lows. We're creating higher highs or we're creating higher lows, and we are testing the support that we've previously tested, right? So this is the resistance that we're testing now. We just continue to test that, right? And this is just how I go ahead and I just train my mind, or I just continue to prepare myself for the week to come or for the month to come, days to come. Just seeing if we can learn from the history here, right? One of my mentors, my early mentors in the market, he always told me, he said, if you want to be right, all you have to do, just look left, right? Because the left is always going to show you or the left is going to help you to better predict what can possibly happen in the future. Obviously, it's not, they say past profits are not indicative of, future results. So what that means is that although we're going to learn certain things from the past, the market is unique to this current moment. The current participants that are in the market are different than the ones that were previously in the market. So we're going to allow the market to show us and to guide us as we prepare ourselves, right? But as we continue to trade this forward, what you'll see is that we have started here to create lower highs and lower lows, right? Internal lower highs and lower lows. When I say that we've created internal lower highs and lower lows, what I mean by that is that this is going to be our lowest low. So as long as we are above this area, this support, right? As long as we are above this move that broke this initial trend line, we're going to still expect that the market is actually remaining bullish. You know what I'm saying? We're going to expect that this market should eventually continue to buy. The only thing that we want here is now that we've seen, sorry, I just stepped off camera for the little one. But now that we've seen that the market has created higher lows, right? We've clearly created some higher lows. Now we want to see the market create a higher high. Everything that happens in this area here, from here to here, this is essentially like a consolidating market. You know what I'm saying? We're essentially seeing the market trading within a range. The range is tight here. You know what I'm saying? Very tight. For some people, there's a lot of traders who would see this and they would take, you could take buy or sells off of the highs, buys the lows, sells off of the highs, buys the lows and trade within that consolidating range. What I look for is once we see that consolidating range, we're going to look for a sweep of liquidity, right? I want to see a sweep of liquidity that takes out the lows or the highs while still maintaining our ultimate low, right? This is our lowest point. Anything below here invalidates that trade. And it actually confirms that the market can continue to the sell side. So we eventually actually get our sweep, right? We get our sweep of liquidity. The market has traded um, below these lows. So if you had entered here to the buy side, right, and you were still holding your trade, you didn't close out your trades at the high, and you're still here, then now your stop loss has been hit, right? As the market continues to trade, it trades lower. It surely does. When it trades lower, we want to see if this market is going to break below our lowest point, which is where it brings us to now, right? This is where we are at this point in time. So what we have at this current point in time, we'll end the replay there. We have our low here, and we'll move this red line here, right? Because this is our lowest point even here, because we don't even really want to see price trading all the way back down into the wicks down here. You know what I'm saying? We want to start to see if the markets are going to respond, reject, react, at this level. If you look at this closely and we start to study the candlestick dynamic, bodies and the wicks of the candle, one thing that you'll see is that, and we're going to start to dial this down from the weekly time frame to the daily time frame to the 4 hour and below there. What we'll start to see is that at least when it comes to the bodies of the candle, right? Which when you think about the candle itself, right? The wick represents the total range or the total movement that the market had within whatever time frame that is. So this is the weekly time frame. This wick shows that the market actually started to buy. There were buyers interested in this market last week. We bought all the way to the highs and the market rejected. It closed much lower. So the sellers were still strong. It was like the sellers were still able to control the market, and the market actually ended lower than the highest parts of its overall range, right? Much lower. However, when it closed lower than its overall range, it still was not able to create a lower low, right? This market actually creates a higher low when we actually, what just happened? Where'd my line go? Up. Okay. You're just going to take my line? What's happening here? Okay, let me see. Give me back my line. All right, let me get a 111 in the chat if you guys can still hear me clearly. All right, excellent. So there's my line. All right, excellent. So what we notice here, it's very fine, it's very small. A lot of people would overlook this, right? But what we see is that there is a low or a higher low that is higher than the previous low, right? This is the previous low. And now we have a low that is higher than the previous low. And remember, all we need in order to validate our trend, if it's a buy side trend, we need to see higher highs and higher lows. If it's a downtrend, we need to see lower highs and lower lows. So at this point in time, on the weekly time frame, we can see already how the market is opening up. I want to see if you remember this. Remember when we were here before we played it forward, right? And the candle that we saw, it kind of looks something similar to what we're seeing right now before the explosion. Do you remember that? Does that sound familiar or look familiar? Let me get another 111 in the chat if that sounded familiar or it seems, if it seems like something. If not, we can go back and we can take another look at it. But in my mind, I remember that this candle that turned out to be like this, it started off like this. So now in my mind, what I see is that what we would look at in order to validate a buy side trade, we would want to see higher highs and higher lows. That's one confirmation, only one confirmation that helps us to identify our trend, right? The next confirmation that we would want to see is we would want to see a bullish or a bearish engulfing candle, right? A bullish engulfing candle, similar to what we see here, right? This shows us that there are more buyers in the market this week than there were the previous week. So now when we look at this, because of how the market closed last week, it's actually really easy for us to have a bullish engulfing candle. If the week didn't do anything, if this entire week was consolidation and we just stayed right here, this would still be a bullish engulfing candle, right? And let's see. That's all I need from the weekly time frame. We're not going to take trades. I mean, so here's the thing. I was going to say that we're not going to take trades on the weekly time frame, but what I meant to say is that we're not going to enter or execute our trades on the weekly time frame. In addition to that, we're also not going to be trading the Japanese yen basket. We're going to be trading the currency pairs against the Japanese yen, which now brings us back to our list. You know what I'm saying? Now, as we review our list, the pairs against the yen, we have the Australian dollar, the Canadian dollar, the Great British Pound, the Euro, the New Zealand dollar. And if I'm being honest with you, I don't trade the Mexican peso, the Swiss franc JPY. Sometimes it's cool. The Russian ruble. I don't trade them, but it helps me to validate my perspectives further when I can see that the entire market, every pair, everything is negative against the yen, right? But the pairs that I primarily focus on, we'll see trades come out on AUD, JPY, on CAD JPYs, on GBP JPYs sometimes. NZD JPY is one of my go-tos just as well. You know what I'm saying? So we'll see, we'll see we'll focus on those pairs um from time to time or on a more regular basis. So now that we have that information from the weekly, we've evaluated the past. We've seen the peak lows, our lowest point, right? Now we see where price is currently trading at, our new higher low. Next thing that we're going to do is we're going to dial it down from the weekly time frame to the daily time frame, right? On our daily time frame, we can see this is where we start to see that the market, of course, again, has been extremely bearish all throughout. It's been pretty bearish. There's a couple things that can happen here, right? We can respect the lows that we were able to identify on our higher time frame. I like to do a multi-time frame analysis, and I like to do like what's called a top down, where you start from the higher time frame and you break it down to the smaller time frames. On the higher time frames, what we're able to notice, right? Oh, and the reason why I do that is because support and resistance on the higher time frame is always going to be stronger than support and resistance on the lower time frame, right? It'll always be stronger. So if I were to find a weekly trend, let's say that this or a weekly support level, let's say this is our weekly support level. And then let's say that this is our daily support level and our 4-hour support level. These lines are very crooked, but this level is going to be the strongest, then followed by the daily and followed by the 4-hour. So you're always going to have, as we dial it down even further, you get down to trading on the 15-minute sometimes. The 15-minute is going to be, weaker than trading on the weekly. So what we want to see is we want to see the market respect the 4 hour, the hour, the weekly, the daily support and resistance or supply and demand levels, right? As we see here, this is where the market sold. You can see it in a little bit of a different perspective. The market bought from here. This is the imbalance that was created here, right? So it's actually possible. Let's see. So these are going to be the levels that I want the market to stay above, right? We can test here, but I want to make sure that price stays above our structure, probably right about here. We don't want to start trading. If we start trading all the way down into here, that invalidates our trade, as I previously said. So this is more of a zone that we're looking at, right? Our demand zone that we're going to be looking at, to where we can see this yen basket buy off of the top of this level, or we can see it trade off of the bottom of this level, right? But as long as we're staying above this structure, we're going to be looking to take our long positions, right? As we continue to dial this down, we'll go to the 4 hour time frame from here. This is where many people start to, assess and evaluate their trades. 4 hour, 1 hour, day 4 hour, 1 hour, 30 minute, things like that. On the 4 hour time frame, we can see more clearly that the market where we're trading at now, we have created a low. So now think about this. We were previously looking at, we were looking at this low. You can see it from a little bit of a different perspective. This was no, it's not. So this was our weekly low. So we're not even looking at this anymore. So this is our weekly low. This is where we want for price to stay above, right? Our weekly levels. As we get down to our daily levels, right, and to our 4 hour levels, we can see that there is a 4 hour low just as well, right? This is our 4 hour low. I'm going to go ahead and we'll turn this green just as well, right? Our 4 hour level. Where price is trading from now, so this is the first candle of market open. Where price is trading at now, we have again created even on the 4 hour. So on the weekly, we've created a higher low. On the 4 hour, we've created a higher low. And we've actually started to break even this downtrend that was previously existent on the 4 hour time frame, right? We can see that this was like a dramatic downtrend. It was broken by this bullish engulfing candle. Broken by this bullish engulfing candle here. When we broke it with this bullish engulfing candle, the market moves into this sideways kind of consolidating range again. And the next thing that happens is we start to see that bullish response once again to where the market breaks out again from this level, right? At this point in time, we've now traded back. We've still seen some sell side, right? We have still seen some sell side. The only thing here is that in the sell side that we have created, we have not seen a lower low, right? If this candle in the 4 hours goes and creates a lower low, then that would also invalidate our trade, right? But we haven't seen that yet. We're still staying above our low here. I actually would start to pay attention to the candle that started this buy side move, even this bullish engulfing candle, right? Because if we're staying above this candle here, that's also a great level of support for us just as well, right? So we can see prices, there's a little bit of a balance here or a fight here. But we do have another bullish engulfing candle that actually pushed higher just as well, still engulfing the previous candles. And that's what brings us to where we are today, right? So where we are today, where we are right now on the 1 hour time frame, market opens, we get a very big aggressive buy side move. So no matter what we see, think, feel, there are some people who are interested in the buy side. But it seems as though when this buy side is activated, the sellers are still pretty aggressive here. You know what I'm saying? They're aggressive, but not invalidating. So we have our a block. This is going to be an order block here, right? An order block is simply just going to be where multiple orders, different types of orders are being placed. We've got our buy, sells, like, and then the market eventually breaks out of that block, right? So we're going to keep it here. We have our bigger zone, and then we have our smaller level just as well. We have our support here that we want the market to respect. It could trade as low as probably this level here. You know, we just don't want it to trade again. Now we're on the 1 hour time frame, and we're looking for any signs that the market invalidates our decisions, right? As long as this market stays above, and you can see as we dial it down, because on the initially on the weekly time frame, we're watching this. Can't even find it, right? You got to zoom out. So on the all right, on the weekly time frame, monthly time frame, we're looking at this as our peak low. We've dialed that back in. Now we're on the 1 hour time frame. On each level, we're kind of finding that the market is giving us similar signs, right? We're creating our low, our break from our low. We have this aggressive move out. The market creates, some internal lows. It doesn't make a high, but then we trade back in all the way to the bottom without actually breaking this low and invalidating our trade, right? So this is where we have like the best opportunity to enter close to where we had this original breakout from. You know what I'm saying? We're back at that exact same level. We're trading back at the lows, but now we're trading with a higher low, right? On the 1 hour time frame. So again, still going and seeing if we validate or invalidate our trade. Price trades back in 30-minute time frame starts to get more clear. We get this next bullish engulfing candle similar to that. This bullish engulfing candle, we would say it shows buy side interest, right? We're staying above our structure on our weekly, on our daily, on our 4 hour, on our 1 hour. We're respecting all of these things. You know what I'm saying? Now we're trading back into a range to where you can see how the market tests here. The moment it tests, it rejects, it buys. It tests, it buys. Now it buys and it gives us this little railroad kind of a pattern. It goes buy side, sell side, buy side. So this market is balanced. And then we get a big buy from there. Now the market trades back into the back to structure, right? So we can say at this point in time that everything, the market is balanced. You know what I'm saying? It doesn't have to make a move lower in order to balance itself. So if the market does sell from here and takes out these lows, then that is invalidating our trade. We're literally taking this trade at one of the closest points of possible invalidation that we possibly can. Any move lower invalidates our trade. Any move higher puts us immediately in profits. This is how you start to see trades that become 1 to 8 risk to reward trades. You know what I'm saying? This is a 1 to 8. So I could take this trade, and you'll learn about my trading style. I'm going through it now with you. But because the risk to reward is so incredible, you know what I'm saying? It's to me, this is how I like to trade. Because with that being said, I can lose, which I don't plan to lose. We all lose. You have to understand how to accept your losses. But if I place the trade, my expectation is that I'm going to win. But if I do lose, I can accept that emotionally. I can accept that, from a technical perspective. And the reason why I can accept that is because with the risk to reward being what it is, I could technically lose the trade 7 times and make it all back with one positive, with one win. You know what I'm saying? So that would literally be like me being positive 15% of the time, which I have no desire or expectation to only be profitable 15% of the time whatsoever. If I'm profitable 15% of the time, I need to slow down and rethink what I'm doing. You know what I'm saying? But if you start to get into the points to where you are positive 50% of the time, what does that do for you? Right? Just to kind of mark that out, because I'm gonna, just do the math for myself. One, 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 and then we have eight, 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 eight. And obviously the wins and losses don't come this, aren't always this clean to where it's just evenly distributed. But 8 times 5 is 40, right? 8 times 5 is 40. 1 times 5 is 5. So with that being said, if I risked $1 to make $8 and I was positive 50% of the time, risking just the $1, I could make myself $35 at the end of the trading day, trading week, or trading month. You know what I'm saying? When we start to think about that in terms of like risking $10 or risking, we don't even got to make it bigger because we get the point in that. You know what I'm saying? We are seeing some sell side here. The market is still selling. We're going to see. I'm going to be off of this call. We'll be on for another 16 minutes. I'll stay until about 8:30 Central. But we're going to see if when this candle closes, if it closes as another bearish engulfing candle that goes to sweep these lows, or if the market actually goes and, this candle closes higher, from there. So we go and we see the 15-minute candle. 15-minute candle, we could be coming and testing structure right here. We'd want to see how that closes and then see if the market goes and continues to push from there, or if the market actually gives us the pivots from that point in time. So how do we actually execute on a trade using what I just said? That talks a little bit about risk to reward. It talks about, which is like, that's how I trade. I trade risk to reward. You know what I'm saying? Because now when you start to say, if I risk $100 on each of these trades, I would have been positive $4,000, negative $500. I would have been a 50-50 trader and been positive $3,500 on my trades. You know what I'm saying? Now start to think about when you really start being patient and waiting and you start getting to that 70%, 80% positive trading. You know what I'm saying? Now it's exponential. There's no touching you. You are you are going beyond. You know what I'm saying? Like that's when things start to really get crazy and you start to see dramatic differences, dramatic account growth, all of those things. But let's hop into it because that's kind of how I trade, just to give you some background. I'm gonna actually take this recording because I think that's a very good lesson that we just went through right now. And I'm gonna share it within our community so people can kind of get a feel for how I view the market, as they are getting started. Um, but let's see. Now I told you we don't trade the JPY, we trade the different pairs against the JPY, right? And essentially, as I do that, the way that I do it is I'm going to kind of scroll through and see and there's something that just shifted here as well, right? Remember, we saw this and there was a mixture. They were all negative before. Now they're seeing some positives and some negatives. That's because the market has pulled back and these currency pairs have responded to that market pullback. When it comes to CAD/JPY now, right? This is the trade that I've entered myself. The trade that I was looking to execute on is not looking as good as I would like, but it still has not been invalidated, right? When this market opened, so this is what I'm looking at now, right? I executed this trade. I believe I called this trade and I gave like a little bit of a range between 114 114.40 and 114.50, right? About a 10 pip range. So trading from here, right, with this being the lows that we want the market to actually respect. You know what I'm saying? We measure this out. We have about a 30 pip risk on this trade, with this initial one being a 1 to 5 risk to reward trade that we're looking to take advantage of, right? We can see the market is actually pulling back. You know, it's actually doing so pretty dramatically just as well as the JPY basket falls. But what we're seeing is that we're testing this block right here. And what we really want to see over the next, and it will be over the next 30 minutes and the next, 45 minutes, 43 minutes at this point. We want to see how this market is going to respond here. Because this could be it could be an inducement move. This could be like a trap to trap sellers, right? Which is okay because we risk 30 pips to make 100 and what is this? 140 pips. You know what I'm saying? So the risk to reward, it makes sense. But what we're seeing is there's a potential that this sell side move was intended to get people like myself to enter the market before the market was ready. I'm not necessarily sold on that yet. You know, we are actually in some drawdown at this point now. Depending on where you got in, we're down 15 pips or you're down 5 pips. I'm personally down, let's see, to give you what I am actually looking at on my screen. I was able to enter this market at 42. So my personal entry is right about here, right? So I'm currently down 12 pips. That's where I'm at right now, right? Which is cool. That's fine. No worries. We expect ups and downs in the market. What I would like to see is I would like to see the market maybe test this block, but reject from here, right? We want to see over the next 30 minutes, next 15 minutes, if the market is going to turn over here, right? Because then it further validates our trade, and we're just going to be holding this for the rest of the week. I might be holding this for a longer period of time, depending on how things, move and shake. You know what I'm saying? But that's kind of oh, let me see. Let's go through some more. Let's go through some more. Couple of reasons as to why we took the sells on CADJPY, right? We can see here we have our bullish, this bullish move, right? We would call this an imbalance in the market, right? After that, we start to see the market creates these lower lows, these lower highs, I should say, and then we get this big dramatic sell-off. Eventually, the market seems to trade, not seems to, but the market trades higher. We actually end up sweeping this high, which is where we're trading at now. But that is our high on it sweeps the high on the like 1 hour and the 30-minute time frames as we previously discussed. Like we started the call off with the 4 hour, the daily, the weekly time frames are always going to be they're always going to be, how do I say, they're going to be stronger. It's going to be a stronger trend if there's an imbalance or if there's a supplier demand zone. The supply and demand zones are going to be stronger. They'll be bigger. If there are imbalances, they're going to be bigger. You know what I'm saying? What we can see here is that on the daily time frame, we're actually looking to trade within this box right here, this block, where we have our sell side, then we have some buy side, and then just the sells. This is an imbalanced zone, an imbalanced area in the market. It seems as though we have now traded to mitigate that imbalance. So we are trading to balance this market. So this would be an initial entry. Well, this is my initial entry, clearly, because that's the entry that I called. But this would be my first attempt to enter this market to the sell side. There's a great potential that we actually test this area here where we're trading at right now, and we reject from there. and fall. If that happens, then we have a lot of sell side potential. The trade that I actually called is just a trade that I called for the company itself. But in reality, you know, there's no saying that that would be our final, sell side, right? We could really expect for price to trade all the way back down into here, and we now turn this trade into a 1 to 20, or we trade it even further from there. You can see some of these trades here, and I'll show you because you'll say, "Oh, it seems like you've just been trying to sell this market. You've just been trying to sell this market." When I zoom in here and I show you the trades that we have executed on, we entered here and we were able to capture over 170, 200 pips on this trade, right? When we enter here, we were able to capture over, you know, 70, 80 pips on this trade. None of these trades were actually losses, right? When we entered here, we were able to capture another another 40 pips on this trade. And then most recently, I did take a loss here, though. I'll tell you that honestly. Then most recently, when we enter here, we're able to capture another 86 pips on this trade. You know what I'm saying? Then I tried to compound my trade. Oh, we got the pullback. Cool. Enter here. Stop loss gets hit. 30 pips stop loss. It's okay. You know what I'm saying? We literally just won like 6, 7 trades at the end of the day. But the reason why I keep this on here in the way that I do is simply because when I saw this at first, there was something that I was paying attention to, right? When I was taking this initial CAD JPY trade, I was expecting for us to sweep these lows and trade back into probably a higher time frame, weekly or a daily level of structure, right? Trading all the way back down to here. So now, even though we are at a higher point in the market, it has just simply made my trade even bigger. Because this is what we're looking for real, for real. And the fact about it is, when a trade like this happens, it'll happen when do you think? It's going to happen at the start of the year, the start of the quarter, the start of the month, the start of the week, or the start of the day as we are here. So we only have to be right one time. If we can be right this one time, we could rock out all year. I ain't even gonna hold you. And we gonna sit down and we gonna find new entries in the market. Because just like we would say, you might say that this is a trend and the trend has been bullish. Well, this is only 4 months or whatever the case may be, but this is the trend, you know what I'm saying? And we've got this trend that we can follow from April to December, right? Now, imagine if you have the opportunity, April to December. Imagine if you have the opportunity. If you think about April to December, even that's 9 months. That's the second quarter to the fourth quarter. That's 3 quarters. The power of three. 1, 2, 3. 3 quarters. Imagine if the 3 quarter trend shifts even just a little bit. Imagine if we come into this new quarter and we get a 1 month. Wait, what did I say? 3 quarters. Yeah. Imagine if we get a 1 quarter trend. Mm. Imagine if we get a 1 quarter trend. Mm. And we just, for one, that's 90 days, yo. Imagine if we ain't got to think about nothing for the next 90. Nothing. We just selling 90 days. Find a new entrant. Yo, we stack up just like that. And for me personally, another thing that one of my early mentors told me is he told me that he said this in relation to stocks. And I've tested it through history. You know what I'm saying? They say that stocks take the stairs up and the elevator down. You know what I'm saying? These slow ranges up. So you see on these slow ranges up, we've been able to catch sell side, sell side, sell side regardless. You know what I'm saying? And it hasn't been that big. It hasn't been that dramatic. You know what I'm saying? From here to here, that is 700 pips. So I ain't gonna hold you. That's a trade. You know what I'm saying? You could have took it and just held it that way up. But imagine and look at these gaps down here. When what took the market 9 months, imagine it being reversed in 3. That's what we have the opportunity to set up for as we kickstart this new year. Bam, 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 bam. You know what I'm saying? So we rocking, we rolling, and we're going to. How much time do I have? I got 3 minutes and I got 4 minutes on here, so we're in tune on that. Um, if you got a little bit of, like I said, you know what I'm saying? This is my perspectives of how I view the market. You know what I'm saying? This is what's worked for me. This is what's helped me to make, my money, and it's what's helped me to do what I need to do and what I, set me up in the ways that I want to be set up. And of course, we're still growing and we're still building. But if you got some value from some of the information that I shared on this call today, drop your favorite emoji in the chat. You feel me? Drop an emoji. We did the numbers already. But let me see an emoji. You showed up for yourself. You know what I'm saying? This is the last day of the year. This is the last, this is like the last week of the year where everybody's taking time off. But regardless of that situation, you said, I'm showing up for me. You know what I'm saying? I'm showing up for me. I'm here. I have the opportunity to learn. If you can learn one thing, take away one thing, then I'm grateful, that I was able to pour into you in that way. And I just hope that it helps you on your journey. And obviously, we're locked in, you know what I'm saying? So we'll have more opportunities to learn together and to grow, to refine our skill set and to build and to develop and all these things. We got a whole nother 365 ahead. And I always tell anybody that shows up on my calls, you know what I'm saying? My style is not going to be for everybody, but for the ones that do are able to take some value, I always say that if you show up for yourself, then I'm going to show up for you as well. You know what I'm saying? You take that step, you take that leap of faith, you're willing to learn and to grow. I'm going to show up for you. I'm going to give what I'm able to give. You know what I'm saying? I've been doing this for a very long time now, and I feel like I've made every mistake that you could possibly make. And I've seen a lot of successes, some extraordinary things that I never imagined I would be able to see, some things that I never thought I would be able to do. 2026, we just gonna be more consistent. We just gonna be more disciplined. We just gonna scale more. We just gonna give more. We just gonna teach more. We just gonna pour more. Everything that God's already given us, we just gonna allow Him to multiply it this year, and we just gonna really put that trust in Him. And my goal, my purpose here is just I just want to help. I just want my 10 years that it's taken me to understand the market in the ways that I do, to build my systems in the way that I have. I just want to take that and to be able to give it to people to help them to compress their own time frames so that you can do it faster than I did it. You know what I'm saying? Ain't no gatekeeping. The best thing that I could ever ask for is that you do it faster than me. You go farther faster, and then we go together, and then we pull the next person forward. That's the best thing that I could ever ask for myself. You know what I'm saying? And if I do that, if I allow God to work through me, you know what I'm saying, to use me in that way, then I'm a truly blessed man in that. You feel me? And that's just like, we pay it forward. So if you learn some, because I got a lot of people, I ain't gonna lie to you. I have a lot of people that I done introduced it to, and they done gone and they done taken it and they've created their own stuff. They got their own flow, they got their own rhythm, they got their own motion. I love that. And I want that for you. My timer is going off now. But I love that for you. Just make sure that you continue to be the light in your community, the light in your neighborhood, the pillar, in your community. You know what I'm saying? Pour into your family, pour into your friends, pour into your loved ones, because once you get it, and you will get it just as long as you don't quit, you'll get it in time. You know what I'm saying? But with that being said, I'm about to tap off, go put my daughter down to sleep. Market still hasn't invalidated. You know what I'm saying? We're trading back within the ranges. We're gonna see. We're gonna see. But I hope you have a great rest of your evening, and I look forward to seeing you on the next call. Take care until the next one. Peace, you guys.